Next Sunday morning, in something close to 300,000 congregations across the United States, a plate will pass from hand to hand along the pews, and almost every person who touches it will assume they are taking part in the oldest ritual in American religion. A brass dish, a quiet organ, a folded bill slipped under a hymnal sheet. It feels ancient. It feels like the way churches have always been paid for, faith funding faith, one voluntary dollar at a time. It is not ancient. For roughly the first 200 years of American history, most churches were not funded by that plate at all. They were funded by the government. Through taxes you could be jailed for refusing to pay. And when that arrangement collapsed, they were funded by something stranger still, a system in which the seats inside the sanctuary were sold at public auction to the highest bidder, with prices printed in the newspaper the next morning. The collection plate is not the origin of church finance in America. It is the third system, maybe the fourth, and every one of those systems changed not just how the church was paid, but what the church was willing to say. Over the next half hour, I am going to trace that money from colonial tobacco levies to a January auction in Brooklyn, where a single pew sold for more than a laborer earned in a year, to a Philadelphia oil fortune that quietly rewrote what millions of Americans believe their faith requires of them, and finally to a set of 4 words that this campaign managed to have printed on the paper money in your wallet, where they remain tonight. And there is one question underneath all of it that I want you to hold on to. The federal government requires every large charity in America, every hospital foundation, every university, every food bank to publish its finances for public inspection every single year. Every one of them, except churches. Churches alone are exempt. And the story of how that exemption was built, and what happened the one time the United States Senate tried to look behind it, is the part of this history almost nobody tells. Here is exactly what this episode will put in front of you. First, the church tax itself, the compulsory levy that funded American congregations from the 1600s onward, and the precise year, 1833, when the last state finally stopped collecting it. Second, the pew auction system that replaced it, including the actual premiums paid at Plymouth Church in Brooklyn, as reported in the newspapers of the day. Third, the 1917 change to the federal tax code that transformed a donation into a deduction, and the 1921 housing rule that still shelters clergy income a century later. Fourth, the oil-funded campaign of the 1940s and 50s, documented in corporate correspondence that helped place the words "In God We Trust" on every bill printed since 1957. And fifth, the disclosure exemption that makes churches financially invisible to the public, and the Senate investigation of 6 television ministries that ran headfirst into it and stopped. A word on method. This channel works from documents, colonial tax rolls, auction notices, the congressional record, treasury correspondence, court filings. Where a number appears in this episode, it traces to a primary source or a named historian, and where the record is contested, I will tell you so. Begin in Virginia in the 1600s, where the Church of England was not a choice. It was a line item. Every household in a Virginia parish owed an annual levy assessed by the local vestry and payable for much of the colonial period in pounds of tobacco, because tobacco was the money of the colony. The parish minister's salary was fixed by law, £16,000 of tobacco a year under a statute of 1748, and the sheriff who collected your taxes collected your church levy in the same visit. Whether you attended that church, whether you believed a word preached in it, made no difference. Baptists and Presbyterians in Virginia paid to support Anglican ministers they regarded as spiritually dead, and Baptist preachers who held unlicensed services were, in the 1760s and 70s, jailed for it. New England ran the same machine with different management. In Massachusetts and Connecticut, the Congregational Church was the establishment, and town taxes paid the minister. This was simply what a church was, an arm of public order, funded like the roads. Then it began to come apart. In 1786, Virginia passed Thomas Jefferson's Statute for Religious Freedom, ending compulsory support there. Other states followed, slowly, reluctantly, and the New England establishment held out longest of all, Connecticut kept a form of its church tax until 1818, New Hampshire until 1819, and Massachusetts, the oldest establishment on the continent, did not amend its constitution to end tax support for churches until 1833. That is the year the American church as a whole was cut off from the public treasury and thrown onto the open market. And here is what almost nobody appreciates about what happened next. The clergy had predicted catastrophe. Lyman Beecher, the most famous preacher in Connecticut, fought disestablishment bitterly, and then, watching the results, changed his mind entirely, writing later that being thrown on their own resources was, in his words, the best thing that ever happened to the churches. Because the market solution the churches found was astonishingly lucrative, it was also astonishingly blunt. They sold the seats. A congregation would erect a building, divide the sanctuary floor into family pews, and then rent or sell those pews as real estate. With the best sightlines to the pulpit, commanding the highest prices, deeds were issued. Pews were inherited, mortgaged, listed in estates. And in the most famous congregation in America, they were auctioned publicly every January. Which brings us to Brooklyn. Plymouth Church, Brooklyn Heights, was in the 1850s and 60s the single most celebrated pulpit in the United States because its minister was Henry Ward Beecher, Lyman's son, brother of the woman who wrote Uncle Tom's Cabin, and by common account the most electrifying public speaker in the country. 2,000 people or more packed the hall every Sunday. Ferries crossing from Manhattan were nicknamed Beecher boats, and every winter Plymouth Church held its pew auction. An auctioneer stood in the sanctuary itself, and the right to occupy each pew for the coming year was sold to the highest bidder, the winning bid paid as a premium on top of the base rent. The New York papers covered it the way they covered the stock exchange, printing the totals and the names of the top bidders. Newspaper accounts from the mid-1860s report the annual auction bringing the church tens of thousands of dollars in a single evening, with the most desirable pews carrying premiums of several $100s each, at a time when a skilled workman might earn $500 in a year. One evening of bidding, and the congregation's entire annual budget was secured. Beecher's salary included, a salary the press of the day reported at $20,000 a year, roughly 40 times a workman's wage. Understand what this system actually was. It was not a scandal. It was not hidden. It was the respectable standard financing model of urban American Protestantism for most of the 19th century, used by Presbyterians, Episcopalians, Congregationalists, Methodists in their wealthier city churches. And it had a consequence that everyone could see, and few said aloud. If the seats are sold to the highest bidder, the congregation sorts itself by wealth. The rich sat front and center in pews they owned. The poor stood in the gallery, sat on benches at the back, or, far more often, simply stopped coming. Because a church financed by auction is a church whose front door has a price on it. One person, one seat, one bid. That was the arithmetic of American worship. And the story of everything that follows, the envelope, the tax deduction, the broadcast ministry, the megachurch, is the story of that arithmetic being refined, softened, disguised, and scaled, but never ever removed. So let me state the mechanism plainly because it is the engine of this entire episode. When the state stopped funding churches in 1833, every American congregation became, in financial terms, a voluntary firm competing in an open market for revenue. And any organization that must compete for revenue will, over time, be shaped by whatever its revenue source rewards. That is not a cynical claim about faith. It is a structural claim about institutions, and you can watch it operate in the record. Under the tax system, the establishment clergy preached obedience and order because the state was the customer. Under pew rents, urban churches competed on eloquence and prestige because wealthy families were the customer, and the price of a pulpit star like Beecher was bid up exactly like the price of a pew. Then, around the turn of the 20th century, a reform movement inside the churches, ashamed of the auction system, campaigned for what were called free churches. No rented seats, every pew open to anyone. Noble in intent, But a free church still has bills, and so the reformers had to invent a replacement revenue technology, and the one they landed on is the one you know. The weekly offering envelope, and behind it the pledge system, in which every member privately commits an annual amount, paid in weekly installments, tracked by the church treasurer. By the early 1900s, this had a name: the duplex envelope. One pocket for the congregation, one for missions, and an entire literature of what churchmen called systematic stewardship grew up around it, borrowing its methods directly from the sales and accounting practices of American business. Now the customer was everyone, which sounds like liberation, and in one sense it was. But it also meant the church now needed a technology of persuasion aimed at its own members, week after week, a permanent internal fundraising campaign. And then the federal government stepped in and supercharged it. In 1913, the new federal income tax exempted religious organizations from the start. In 1917, with the War Revenue Act raising tax rates to pay for the First World War, Congress feared wealthy donors would stop giving, and so it created the charitable deduction, meaning that from 1917 forward, a dollar placed in the plate by a high-income donor cost that donor considerably less than a dollar. 4 years later, the Revenue Act of 1921 excluded the rental value of a minister's parsonage from taxable income, a rule later expanded in 1954 to cover cash housing allowances. Follow what the code had just done. It had made the wealthy donor the most tax-efficient source of church revenue in the country, and it had done so precisely in the decades when American fortunes had grown to a scale no vestry in Beach's Brooklyn could have imagined. The pew auction had sold the best seats to the richest families. The tax code quietly sold something larger. It gave the largest donors the greatest leverage over what American Christianity could afford to become. Patricia in the pew with her envelope never saw the change. The change was happening several floors above her. Watch it happen 3 times in 3 very different fortunes. Start with the most methodical giver in American history, John D. Rockefeller, a devout Baptist who tithed from his first paycheck, did not simply donate. Beginning in the 1890s, he employed a former Baptist minister named Frederick T. Time Gates as a full-time philanthropic strategist, and together they applied the management logic of Standard Oil to religious giving: consolidation, efficiency, conditional grants. Rockefeller's founding gift of $600,000 in 1889 launched the University of Chicago as a Baptist institution, and tens of millions more followed to Baptist boards and education societies, almost always with conditions attached: matching requirements, governance requirements, mergers. Then came the boldest move. In 1919, his son, John D. Rockefeller Jr., threw his fortune behind the Interchurch World Movement, an attempt to consolidate the fundraising and planning of dozens of Protestant denominations into a single centralized campaign run on corporate lines with a fundraising goal in the hundreds of millions. It collapsed within about a year, and historians of the episode estimate the Rockefeller interests absorbed millions of dollars in losses covering its debts. But mark the precedent it set. One family had attempted, in the open, to reorganize American Protestantism the way one reorganizes an industry, and the churches had let them try. Second fortune. J. Howard Pugh, president of Sun Oil in Philadelphia, a Presbyterian who was convinced that New Deal economics and Christian faith were incompatible. The historian Kevin Kruse, in his book One Nation Under God, has documented in detail how Pugh and a circle of corporate donors from the mid-1930s onward funded a Los Angeles minister named James Fifield and his organization Spiritual Mobilization, which supplied sermon material, radio programming, and a magazine to thousands of ministers, all arguing that free enterprise was not merely compatible with Christianity, but commanded by it, freedom under God, as the campaign phrased it. In 1951, its Committee to Proclaim Liberty organized Independence Day sermons on that theme across the country. And the same Pew money later helped Billy Graham and Carl Henry launch the magazine Christianity Today in 1956, which became the flagship publication of American evangelicalism. Per Kruse's account, the theological landscape millions of Americans inherited as timeless, the fusion of piety and free markets, was to a remarkable degree built in those 2 decades on oil and manufacturing money. Third fortune, and this is the counterintuitive one, because this time the money did not shape the message from outside, it became the message. In the 1950s, the Oklahoma revivalist Oral Roberts began teaching what he called the Blessing Pact, later seed faith, the doctrine that a donation to the ministry was a seed that God would multiply back to the giver. Give in order to receive. Roberts built a television audience in the millions and a university bearing his name on that doctrine, and an entire generation of broadcast ministries adopted the model, because as a revenue technology it was unmatched. Every sermon was simultaneously the product and the fundraising appeal. The pew auction at least stood outside the theology. Seed faith fused the two. The offering plate had become the doctrine. So by the 1980s, an American church could be a broadcast corporation with tens of millions of dollars in annual revenue. And here is where the question I planted at the beginning comes due, because you would assume that an operation of that size faces the same public accountability as any other charity. It does not. And the reasons stack up like this, 5 layers deep. Layer 1, automatic exemption. Every other charity in America must apply to the IRS and demonstrate that it qualifies for tax-exempt status. A church never has to apply at all. Under the code, churches are presumed exempt from the moment they declare themselves churches. No application, no review, no threshold test of doctrine, membership, or finances. Layer 2, the disclosure exemption, the big one. Since 1943, tax-exempt organizations have been required to file an annual information return. Today's Form 990, listing revenue, executive salaries and spending, and those filings are public documents anyone can read. Congress exempted churches from that requirement, and the exemption stands today. A university with a $50 million budget shows the public its books every year. A ministry with a $50 million budget shows the public nothing. Layer 3, the housing allowance. That 1921 parsonage rule expanded in 1954 to cash allowances lets clergy exclude housing costs from taxable income with no fixed dollar cap in the statute. And when the IRS challenged the megachurch pastor Rick Warren's allowance in court around the year 2000, Congress responded in 2002 by passing a clarification act that protected the exclusion. Treasury-adjacent estimates have put its annual cost in the hundreds of millions of dollars. Layer 4. Audit protection. Under the Church Audit Procedures Act of 1984, the IRS cannot even open a church tax inquiry without a reasonable belief of wrongdoing signed off by a high-level Treasury official, a hurdle no other category of non-profit enjoys, and church audits are, in practice, rare to the point of statistical invisibility. And Layer 5, what happened when the Senate tried? In November 2007, Senator Charles Grassley of Iowa, then the ranking member of the Senate Finance Committee, sent letters to 6 of the most prominent television ministries in the country requesting financial records, salary information, details of parsonages, vehicles, and aircraft. He had no subpoena power he was prepared to use, and the ministries knew the disclosure law was on their side. According to the committee's own concluding review, released in January 2011, only 2 of the 6 cooperated fully. The inquiry closed after 3 years with no penalties, no legislation, and a recommendation that the industry regulate itself, which led to a self-formed commission and little else. Per Giving USA's annual reports, religion remains the single largest destination of American charitable giving, well over $140 billion a year in recent estimates. It is the largest and the least visible. Both of those things are the direct, documented result of the architecture I have just walked you through. And now the receipt, the detail I promised you at the start, because the strangest artifact of this whole history is sitting in your wallet right now. Take out a dollar bill and read the 4 words above the word "one" on the back. In God we trust. That sentence is not a relic of the founding. It first appeared on American money in 1864 on the 2-cent coin, after a Pennsylvania minister named Mark Wattingson wrote to Treasury Secretary Salmon Chase in 1861 urging that God be recognized on the coinage, and Chase agreed, but it did not appear on paper money for nearly a century after that. It reached the paper only in 1957 after Congress passed a law in 1955 requiring the motto on all currency and made it the official national motto in 1956 at the exact peak of the corporate-funded religious mobilization we traced earlier, the same years that put under God into the Pledge of Allegiance in 1954, which means the sentence on the money is not evidence of an eternally pious nation. It is a timestamp. It marks, almost to the year, the moment when the campaign to fuse American faith with American commerce reached its high-water mark, and it was printed, of all places, on the commerce itself. The money does not just fund the church. The money carries the church's story, dated, on its back. So hold the whole ledger in your mind one last time: a tax collected by the sheriff in pounds of tobacco, an auction in a Brooklyn sanctuary, premiums printed in the morning paper, an envelope system borrowed from corporate sales accounting, a 1917 deduction that made the largest donors the cheapest ones, oil money underwriting sermon scripts for thousands of pulpits, a doctrine in which the donation itself became the act of faith, and around all of it, a legal shell, automatic exemption, no public books, protected housing, near immunity from audit that no other institution in American life enjoys. None of this required a conspiracy. It required only the oldest rule in institutional life, that whoever funds a thing shapes it, applied steadily, for 400 years to the one institution Americans assumed stood outside the market entirely. The church did not fall to money in a single dramatic transaction. It was purchased the way most important things are purchased, quietly, in installments, with a receipt printed where no one thinks to look for it. Next Sunday, when the plate goes by, you will know that you are holding the newest system, not the oldest, and you will know the names of the people who built it. If this episode changed the way you see something as ordinary as a dollar bill or a collection plate, subscribing to the channel is the best way to follow the work, and a like genuinely helps these histories find the people who would want them. I will see you in the next one.